All right, everybody, what's going on? Welcome to Tuohey Talk Show, episode number 7. I've got a real special guest today. He is actually one of my first trading friends that I ever really got close with, and he's crushing it right now, and I'm really excited to have him on as a guest. He had one of his biggest trades of all time just a couple days ago, and we're going to go over that, go over kind of who he is, his journey as a trader, how we met, and just some other general trading stuff. Maybe he's got some pretty cool views on the overall market too, I know. So maybe we can talk a little bit about that. And if you guys do have any questions for him, this is live, so be sure to ask it in the chat. And we'll be going over all that. But without further ado, I want to introduce my good friend, Jordan O'Gwyn. Take it away. Tell us a little bit about yourself, who you are, how we met, and kind of how you're doing. I'd love to hear it. Oh, hold on, but before you do, okay, now you're good.
Good to go?
Good to go.
So I started trading in 2019, had some really good teachers. I knew Dominic Master Mateo from high school, and we worked a landscaping job together, and he was my foreman. And then he ended up moving on to bigger and better things, aka day trading. And I was still doing the landscaping thing. And then every other day, his brother would be like, "Oh, Dominic made this amount of money or that amount of money day trading, yada, yada." And I would just be like, wow, like blown away. He's like tripling my paycheck in a day. And so that kind of sparked my interest. And long story short, ended up dropping out of school to just see what I could do. And it wasn't really going anywhere. So I reached out to Dom and asked him if I could come, watch and see what he's doing and how he's doing it. And back then it was all about OTC. And so that kind of kickstarted the journey. Jack Kellogg was there at that point. And so I just kind of, before I even got my footing, I was just surrounded by these like awesome teachers, and I was just way out of my league, and learned the OTC, and then the OTC kind of died. So I kind of had to move on to listed stocks, and kind of took some of those OTC principles and adapted them to listed, and found somewhat of a long strategy with first green day and buying breakouts and yada yada. And 2 years later, now we're here.
No, it's a fantastic story. It's very similar kind of to the way, I first got started. When I first started trading, I was also in college, and much like Jordan and I both dropped out, and fortunately we I'd say it ended up working out for us, right? Yeah.
So far.
And so a little backstory, when I kind of first got into trading, Matt Monaco and I had our podcast Beyond the PDT, and one of the earlier people I want to say that we interviewed was Dom Master Mateo, and we kept in contact with him, and became friends with him, even outside the market, and got to meet a lot of Dom's friends, and J Bones was one of them. And I don't know, J Bones and I were in like a very similar spot trading, right? J Bones got started 2019. I got started. Well, I guess it depends on what you classify as started, or started. Everyone. I don't know. Maybe not everyone. But back then, the market wasn't nearly as hot as it was like 2020, 2021, and it was much more cyclical, like J Bones said, right? And by the way, J Bones is Jordan. That's his. If you check down to the Twitter, that's his Twitter name, his nickname. But it was much more cyclical, and right. So when OTCs, right, they were popping off. I want to say that was during the Bitcoin run is when they really started, and they went into beginning of 2018. SHMP, stuff like that, having these crazy multi-day, multi-week moves. But then when those died, a lot of times there were a few weeks where there was just nothing. And I was looking back through some charts of gappers from 2018 in the small cap sector, but you know what I mean, small caps, that you just gap up 50%, and they would literally within 15 or 20 minutes be underneath previous day's lows, like giving back all their gains. And so there wasn't a ton of long opportunity. And a big part of that, right, was just a lot less volume every day. I mean, now we have commission-free trading. We have day trading. Everyone wants to get into it. It's kind of all the hype these days. But it wasn't the same back then. And so where I was going with that is, I got technically started end of 2017, but by the time mid 2018 came around, OTCs were kind of dead, small caps were kind of dead, and I had school going on, I was working, and I just kind of took off a few months really. And so then I really started picking it back up heavy end of 2018, early 2019, and still struggled quite a bit. I'm sure, J-Bones, if you want to, I'd love to kind of hear your journey, your first year, right? Because I know it's really tough. A lot of traders get into this. They're seeing these huge P&Ls on Twitter. They're like, all right, I want to make all this money too. And before you know it, they're down because they thought it'd be a lot easier to make money. They don't have those risk management practices. So like during your first year, before 2020, and then we'll get into 2020 and 2021 as well. But what was your experience like as a trader, as a beginner trader?
So 2019 was like the tail end of one of the hottest markets ever. Fall and winter of 2018 was absolute insanity for the OTC. And I remember I started February 11th or 13th, 2019. And my first day in the office, Dom and Jack were looking at a stock called VYST. And it was like a 2 or 3 cent stock.
Can I interrupt you real quick? It's important to note, for those of you that don't know, you guys all know Jack Kellogg, Dom. They used to live together. I don't know if like that was, I'm sure that's, some people know it, but if you guys are maybe newer or didn't know, they used to live together. And so, J-Bones, you would go there and be with both of them, correct?
Yep. Jack was living with Dom. He moved out from Connecticut for, I think, like a year or so. And this was when he had like 120 grand to his name. But my first day in the office, they had that ticker up on the screen. And from how they described a breakout to me, everything made sense. And so I ended up getting in with like $50 risk or something like that. And my first day I made like $500 or something. And so I was like, got the worst impression you possibly can get. I mean, it was good to make the money, but to walk in and just have something fall in your lap, it gives you an impression that ends up hurting you in the long run. Because after that trade, I spent 6 months pretty much giving away my entire account because I was just, thinking that every chart that had the same shape as VYST was just bound to work, when that wasn't the case. There's a lot more to it, obviously. And so I had to quit in September of 2019 and got a job cooking Thai food. And so at that point, I was just like, okay, well, this is my life now. So just going to see if I can get a raise and maybe make like 40 grand a year eventually or something. But so I did that from September to April of 2020. And then in April of 2020, that was after the market crashed and lockdowns. And we obviously got that like quantitative easing from the Federal Reserve, and basically all of that inflation was just getting priced in the matter of like a month. So every single stock was just flying up. And so April is really when I started to look back at the charts and be like, maybe OTC isn't the answer, but maybe listed stocks, maybe there's something to it that I can find an edge on and make something happen. So started trading again in April, just applying some of those OTC principles to some of the listed runners I was seeing, and was able to get to a point where I was confident that like I could try it again. I had saved up some money from working. I was ready to give it another shot. So then by May 15th, I think I quit that job and decided to go full-time again and go back to their office and, just give everything a shot. And since May of 2020, I've been green every month since then. So I'm super fortunate about that. But yeah, I never really looked back from that point and just been very blessed.
Now I have to ask, during that time where you took off to start working and whatnot, I don't even know if I really know this, because I think you and I started talking. Was it before? It couldn't have been before you got really back into it. I think it was like May of 2020, like right after you got back in.
Yep.
During that time where you took off, some time from trading, were you looking at any charts ever, or were you just completely out of tune with the market?
I'd say I was like 99% sure that I wasn't going to trade again. I would still keep up with my buddies and kind of watch the trades they were making and admire it and whatnot, but I didn't really have it in my head that I wanted to go back. So it was just kind of like a outsider perspective. I wasn't studying, wasn't trading. I was just working out like 6 days a week to keep myself distracted. Just working and working out was about it. But yeah.
So I'm definitely curious to hear this too. And I guess I know the answer, because again, you and I traded together for like every day. We would just get on phone calls with each other. But when you got back into it, you were still using pretty small size, right? I mean, you didn't drastically increase your size or anything. You just kind of kept it relatively calm and reserved. Was there a reason for that, or was it you just didn't have enough money to use big size at the time, or were you trying to get back into it with small size?
When I came back, I put like $4,000, maybe $3,500 into an account, and so obviously PDT was a big issue, and I was trying to find someone that would invest in me to get me above PDT, but my parents weren't having any of it. So I went to my grandparents, and they were like, well, look, you have to show us something first before we're going to give you this money. So I had 4,000, and then those first few months I turned that into like 8,500 or 9K or something like that. And so by July or August of 2020, I had grown the account enough to where, I explained to my grandparents, like, my money's just going to sit on top of your money, and I'm obviously not going to use your money to trade with, but being above PDT would be night and day difference. Obviously, anyone who's ever day traded knows that. So I finally convinced the grandparents to give me the money, and yeah, I think it was July, but after that, that's when it just kickstarted everything, because when I had that money, being able to trade more makes you want to study more, and then being able to study more, you start to see more, and you just kind of compound on yourself at that point.
No, absolutely. And it's interesting because I've heard so many different stories from like people who, a lot of people, or maybe not a lot, but people grew their accounts out of PDT. Some people saved up money outside from working while they were trading, which is, what I did. And then, other people, I've seen people literally take out like credit card loans, right? Like they've taken cash advances on their credit cards. Was that like more stressful to you, knowing that, you have someone else's money in your account? And I know it was different because you're like, I'm not using your money, but was did that like have some kind of motivating factor? Like if anything happens, like what happened? Were you ever worried about like a full size loss ever wiping out the account?
Well, I mean, back then, the patterns were just so different. There were clean risk levels. I was just never irresponsible with the money. I was risking, it went from $50 risk to $100 risk, and you could confidently risk a single spot on the chart, versus now where you kind of have to risk a whole range basically, and then you're expecting the stock to come back to that range and test it, and you're seeing how it reacts to it. But back then you could find one price and risk it. So I was usually pretty confident I wasn't going to lose a lot. And I was never really scared with the money, because I was just never even tempted to use it. I was just so thankful that someone was willing to invest in me. So I was never even going to think about like betraying them like that. So no, I wasn't too worried.
No, absolutely. And that's one thing too to note, is like one of the most important things I'd say that, I learned from Dom when I was like, when we were talking together all the time, like you, me, and Dom, and all of them, risk management is huge, right? Like that, and that's unfortunate. Obviously we know that, right? That's something we emphasize all the time. And a lot of people emphasize, although I see a lot of people on Twitter too who are like, oh, it doesn't matter, like just hold, buy the dip, keep buying. But like one thing that like really stuck with me, and it probably comes back from the just, I'm sure if you guys know Tim Sykes or see him on Twitter, all you see is cut losses quickly. But Dom like made sure I stuck to that, and I'm sure he did with you too. Like, you don't risk management is key. It's king. It's how you become a profitable trader. And so I know you had fantastic risk management really from the start, which is something a lot of brand new traders, it's a hard thing to grasp. And I'd love to know if, like, obviously that's probably a big part of why you are where you're at now. But I mean, you've never had a truly massive loss, have you?
No, biggest loss was recently, and we can talk about that in a little while, but that's like the one stat that I'm pretty proud of, because I've kept my biggest win about 3 times as big as my biggest loss over these few years. And I'm just way more willing to, let go of some potential profits than let something slip by and turn into a bigger loss, just out of, holding and hoping, that whole thing. But I've always been okay with cutting losses, where I know other traders who like physically can't bring themselves to cut losses sometimes because they're so convicted. And I think an important thing is you really have to learn to let go when you're wrong and when the chart tells you that you're wrong. So I never really thought about it along the way. It just kind of ended up happening that way, where I'm fine with letting go of something and potentially missing out if it means staying safe, live to fight another day, that sort of thing.
No, absolutely. And we already have some questions upcoming in chat. And one of them, and I'm going to kind of build this like a multi-question here, but someone is curious. Earlier you talked about that first Green Day strategy that you really first got started off with, but I'm also curious for these, for anyone listening, the patterns that were working best for you in 2020, and obviously now, right? They're not working. I mean, some of the stuff we were trading in 2020 doesn't even happen anymore. Like, you don't even see those setups, right? I know you know exactly what I'm thinking of too. But let's start off with the first Green Day, because we can kind of get into this. Will show kind of how the market does change over time and how you and I have adapted. Because I for one can say the first Green Day pattern, it still happens, but not nearly as cleanly as it used to in the listed land. But so first, a little bit about the first Green Day pattern that got you started, and then let's chat about some patterns that we used to trade too.
So just sort of define a first Green Day?
Yeah, I mean, so earlier you mentioned that one of the first strategies you got started with, right, was I'm saying that right, like one of the first patterns that you kind of got consistent with or started understanding is the first Green Day, right?
Yeah, I always had a better time finding an entry when there was already data on the chart. Like some people specialize in breakouts, which is basically an idea in your head that, the current technicals show that the stock is going to do this, this, and this. But my strength was looking at the charts that had already had that multi-day run, and then looking for that support after the multi-day run comes to an end. And, you have all that data to go off of now versus relying on just the conviction of, the breakout happening. So I always found it easier the first Green Day was always easier for me because I had so much data to go off of, and I could, you can visibly see the support. You can see where the risk reward makes the most sense. It's less of an idea trade and more of, I kind of know what to expect based on what the multi-day run did, where it supported afterwards, and what it's doing now. You know what I mean?
Right. No, and I think that's one of the biggest benefits of trading a first Green Day pattern is the range that the stock has already had. You know how it moves, right? Everyone, we always talk, or maybe not we always talk about, something I've always been a big fan of in trading is like, know how a stock behaves. If you've traded this stock multiple times before, you kind of have an idea of how it should behave with certain patterns. Does it double top a lot? Does it fake breakout a lot? SBFM, you and I were just talking about before this call, like it was such a choppy move that I had trouble playing it. And I wanted to trade it today, but unfortunately they dropped that offering. But like you could see how stocks move for multiple days at a time, and you don't know this for a fact, but you can expect that it'll continue to move like that. Maybe on a first green day, maybe on a breakout attempt. And so I think that's a huge benefit of trading a first green day pattern is you've already gotten to see all that data. You've gotten to see what kind of range it has. If it's down in just a couple days, 70, 80% off highs, you can expect a decent bounce to resistance levels, right? Where generally bags are trapped from if they're long, right? Or if you had a lot of liquidation, it's probably gonna have a tougher time bouncing because people who are buying that dip just kept getting dipped on. That was a huge, I want to say it was SNPW had a really tough time bouncing, right? Because it was just straight liquidation. And I already know people are probably going to ask this question, but how do you define a first green day? What do you personally look for? And two, like, are you're not really, sometimes I guess you can scan for a first green day, but more often than not, I'd have to imagine you're looking at a strong stock, keeping that on your watch list for a first green day, but would like to hear your thoughts on that.
So a year ago, 2 years ago, a first green day would be defined as a multi-day run. You want to see the stock go. I mean, I don't really like to give strict percentages of, the minimum that it needs to run up, but you basically just want to see a multi-day breakout, and you're looking for at least 2 to 3 red days with some consolidation. And then after 2 to 3 red days, usually, some shorts are ready to cover, some dip buyers are ready to come back in. And that I always found the tightest risk reward in the first green day because you're looking for that breaking point where the stock is going to break away from the support that it just formed and potentially retest the breakout even, or somewhere in between. But for some traders, I know that trading within that range is not good enough for them. Like they want way more R&R than that. But I think that if you're good enough at finding that breaking point, you can find amazing risk reward within that range from the bottom of the first green day to the top of the breakout. It doesn't have to re-break out. You can find 6, 7, 8 to 1 trades on a first green day. And it just always came easier to me, like I said, because you have so much data to work with. So,
right. No, I couldn't agree more. And obviously, that I'd like to see if you feel this way too. I haven't traded a really great first green day in months. I haven't seen one that isn't really choppy, a lot of fake outs. I don't know. Do you want to, have you had any really solid first green day trades lately?
Yeah, I had one decent first green day this week. I was looking at, my eyes have been glued to the weed stocks because obviously of all the legislation going on. And
I can pull up a chart for you if you want.
Sure. Yeah.
All right. What do you want me to type in here?
So what do you want to do first? Do you want to talk about FLGC or do you want to talk about Tilray?
Let's talk about, let's start off with Tilray here. I'm going to switch that over to this. All right. So what,
Tilray,
which day do you want me to go on?
You can go on, I would
right
just
here.
do like a 20-day, 15-minute.
Yeah. 15.
So yeah, obviously after it topped out near 9, my eyes were glued to it for all the reasons that I stated. I'm just looking for it to bottom and see where that key support is going to form. And I knew we have so much potential here because of all the legislation that might be coming up with like the federal legalization bill and whatnot. So I had a couple early stabs on it this week, Monday and Tuesday, and it just wasn't ready, but I kept the losses small. And then Wednesday, what was it?
Would that have been the 5th here?
So Tuesday, Tilray was basing around like 690s, and then it got like a random huge candle you see there where just millions of volume come in, and it turns out that Chuck Schumer said that it's looking good for the legalization bill to move forward to the Senate vote and whatnot. So I saw the spike pretty early. I bought 10,000 shares at 707, which is like I would have wanted it closer to 7, but I didn't really want to be too picky. So I was psyched because within 10 seconds I was up like $3,500 or something like that, and I was like, holy crap, like this could actually be a first green day in the afternoon, but then in typical Tilray fashion, it sold right back to lows. And I was just like, what does this mean? Like, how is it selling off that hard on the news? Blah, blah, blah. But I knew they had earnings the next day. And if it were at highs, I wouldn't have necessarily trusted earnings because it would have more than likely turned into a like big sell-off event. But since it had 4 or 5 red days in a row at that point, and so I was like, okay, well, the odds are clearly in the favor of the longs at this point if earnings are tomorrow. And so I was really struggling on what I should do at the end of the day. I was like, do I really want to swing like a $71,000 position? And then I sat there until 8 p.m. thinking like, what do I do? What should I do? And almost sold half at 759, but decided to just keep it. And then the next morning, there was just a wave of press releases. They got like a Whole Foods deal, which Whole Foods is obviously owned by Amazon. They were supposed to have earnings at 8:30 Eastern. It came out at like 7:45 or something. And so all of this stuff, it had so much going for it. It held 7 pre-market. Everything was basically going in my favor. And so I was feeling pretty good. And then by the time those like secondary brokers like Robinhood and whatever open up at 8 a.m., there was just like a giant volume candle. And I was like, okay, well, pretty much got to just stick to my guns on this one. I was risking the day prior's lows, which was like 691 or something. So risking like $1,600. And by the time it opened, it was at like 790s, had a quick drop to 750, supported there. And then when it rebroke the highs and got to 8, I was like, this is almost 3 times my biggest trade ever. So probably take off like 85% of my shares, which is exactly what I did. I sold 8,500 at like 802, 803, and then just held 1,500. I was like, well, if this holds 7 again or like 750 again, then I could look for it to maybe move to 850, and didn't end up happening. Actually got distracted the next morning. Didn't set a stop, which was supposed to be at 691. Ended up selling at like 660s for like an $800 loss. But I was psyched at that point. I'd still cleared like $7,300 or $7,400. So
that's beautiful. That's beautiful.
So yeah, that is like for me, that's like a picture perfect first green day. I would have liked for it to hold higher on that spike the day before, that Senate spike, but it held 7, which was all that mattered. And Dominic was there to like reassure me of that. He's like, all that matters is that it held 7. So just be patient, yada, yada. And it worked out. And that was this month. That's been my only like halfway decent trade. And it was my best trade ever. So that was the month maker.
You know what's funny about that is, so yeah, you're gambling on earnings, quote unquote, but in the same breath, like you said, it was sold off for 3 or 4 days, however long it was. It's almost like unless they got crushed on earnings, right? It's a catalyst. I see a lot of earnings losers gap up. And like you mentioned, right? Like most of the time, a big earnings winner comes out and you have a big gap up, it still turns into a sell the news event. And so like I like that idea, right? Where you're going for that first green day, you're going knowing they have a catalyst, and unless they really blow it, more or less it is going to, if nothing else, just stabilize. But if it's good earnings, like you said, they had a bunch of other PRs coming out too. So you had the first green day with a catalyst. I mean, that's a fantastic trade. Now I know before that, and it's still in the weed sector, am I right? We got some FLGC. Do you want to pull up that chart?
Sure, yeah. I mean, this is not how I would recommend anyone to trade, but this was when Tilray had gone from like 5 to 9, and I was like, okay, well, I've seen this before. I studied the 2018 pot stocks move. I got to trade the 2021 pot stocks move. So I know that sympathies typically work well in this sector. And so I was like, what's the cheapest sympathy I can find with the lowest float, because all of these big weed names have such huge floats now. And so I remembered FLGC because that was like a pretty good runner from back in the day. And so I don't even remember where it was on the chart at this point, but I bought in the low twos, just hoping that Tilray was going to hold up and consolidate. And that just never really happened. I mean, every time Tilray would make a move, FLGC would move like 1/10 as much relative to the price. And by the time that Tilray was looking to sell off again, I had like 25,000 FLGC from like 198 or something. And it was basically just one candle, broke my risk, took like a $3,000 loss on that. And that was actually my biggest loss ever. So not my brightest moment, but that was just me hoping that the sympathies were going to work and not really waiting for them to prove themselves. And so I paid the price,
Right. No, yeah. And that's one thing that's like probably the hardest part of sympathies, right? Is one, especially when it's in a sector that's run many times before, run a couple times before even, that there are certain stocks that follow along the sector leaders. And the hardest part about sympathies is like, not all of them run, right? I mean, I remember during the EV run, it was one of the hardest things for me. I love sympathy trades. I do. But one of the hardest things was like, you would get these random perks that showed interest and then just complete sell-off, like nothing. Like there's just didn't respect support. And that's probably the hardest part is like, when it comes to trading sympathies, in my opinion, is by the time you found ones that are strong, most of the time they don't provide a great entry, right? Because they're a sympathy. They're not a leader. A lot of them aren't going to run as far as the leader does. And so by the time they start consolidating and really setting up again, I find they're very tough to trade. And it's like, you almost have to be a little early on them. But like you said, you had your stop and you accept the loss. That's the most important part. Were you accepting that loss before you got into it? Or was this something where, did it turn into a bigger loss than it meant to be?
Oh yeah, it turned into a way bigger loss than it meant to be, because I just had that stupid mentality of, I have to be right here, and this has happened twice before, so it has to happen again. Whereas if I just was patient and gave it a little bit more time, let Tilray really set up if it was going to for like a multi-day breakout, it would have been a much better option. But I was just like, FOMO to the max. Like, I don't want to miss it this time. I've been struggling these past couple of months because so many factors are different in the market. So like, I need to get in now. And like, my original risk was going to be like $1,000, and then it just kept dipping. I kept adding, ended up with like 25,000 shares. And by the time cutting was like necessary, I was just like, holy crap. Like, I'd never accounted for a loss this big on something that's not even a pattern. It was just, hoping the sympathy was going to work. So yeah, original risk was going to be like 1,000, ended up being like 3, like I said.
Now, this was something that we talked about with my guest last week, my friend Ron, and something similar happened to him where he took a way bigger loss than he anticipated. And what do you do, right? Like, this is now your biggest loss of all time. This was just a week or two ago. What do you do now, right? Like, how do you? I guess actually your biggest win came after your biggest loss. Am I correct? Or was it?
Yep.
But so now though, right? Like, moving forward, do you have any new rules set in place? Do you have any? Like, what do you do to adapt to that, to adjust to making sure that kind of loss, I should say unplanned loss, doesn't happen again?
My most like relevant trades, whether it's good or bad, long or short, they always get printed out and put up on a wall or written down somewhere. And you just have to do something with your mistakes to make sure they don't happen again. Like, like printing it out or writing about it. and just making sure it doesn't happen again. But there's nothing out there convincing me that sympathy plays are a good idea right now, no matter what the sector is. We just haven't seen anything to prove otherwise. So I'm just I'm not too worried about it. I was up a lot that day, so it was good. I actually ended up green that day, so I was thankful for that. I'm sure I would have took it a bit more personally if I ended up red that day. So maybe I didn't learn my lesson all the way, but like I said, I'm not in any rush to get too slap happy with sympathy plays again, because it's just, nothing has proven itself this year to be a quality sympathy play, except for the oil stocks that we saw. Say. That was about it, but I managed to screw those up too. So.
Oh, you and me both. Well, it's funny though. Like, I think that's one of the problems too, because sympathies, right, come from a hot sector. Oil and gas has been the really only truly hot sector I feel like we've seen in months. We've had some random pops, but for no, like in different sectors, but for no real reason, right? No global catalyst. And obviously oil and gas did. That's one thing I miss, because, and we'll get back a little bit here. We're going to backtrack into 2020 and kind of adapting in the market and whatnot. But during 2020 and 2021, I mean, it was when one sector died, another started. It was crazy. I mean, there was no stopping it. But to that, then they'd have sympathy. Since there was sector momentum, you'd have sympathies coming off of that. And what was wild is those hot sectors created like sympathy sectors, right? I mean, when EV started running, then battery plays started running, and then solar started running. I mean, it was weird. It was something I don't know when the next time we'll see is, but I want to backtrack a little bit, because I said we'd talk about this a little bit earlier. We've both adapted quite a lot, grown a lot over the past 2 years as traders. Do you ever consciously think about how you are going to adapt to a market? I think it was probably a little different. We were forced to adapt, because even though the patterns we were trading, I mean, we were trading basically like, what were we trading? We were we were trading stocks at lows, bouncing them to VWAP half the time, right? I mean, but that pattern doesn't happen anymore. The only reason that ever happened is because like everything would run. So now these days, I'm sure
that was just. No, go ahead and finish. I'm sorry.
No, you're good. Are you conscious of adapting these days? Like, and how so have you adapted over the past 2 years?
Well, part of it was just kind of doing some research, doing some thinking. Why did they run so crazy back then? And I think it's just because one of the first places that inflation is priced in is the stock market. And so after all of the quantitative easing that we saw, with trillions and trillions of dollars being printed, that inflated stocks just as much as it did all other assets. And it just happened to be that the stock market was one of the first places to experience that inflation. So I feel like, from what I've read and just my experience, that was the main reason so many stocks were flying and all these sectors were going crazy, was because stocks were just inflating. And as far as adapting now, I'm really just taking it one day at a time, because I've thought the market was topped out 4 or 5 times now, and the Federal Reserve always finds a way to prove everyone wrong. And so right now, I think it's just about being patient and waiting for something to prove itself. As far as being strictly long right now, there's not really much to adapt to. I'm a hardcore scalper right now, aside from the Tilray trade, which still, in terms of percentage, wasn't even a crazy percentage. I just got lucky and I had a lot of size, which I'm fortunate for, but it wasn't some crazy 100% move. And so I'm just trying to focus on those solid 15 to 20% moves that I can size in confidently on, and just limiting trading overall, because overtrading is just a terrible habit right now. I know some people who overtrade, and it's just it's not going well for them.
Well, yeah, we used to. I mean, I remember like even back when I was trading really small size, but I was trading with a cash account. You used to be it wasn't only acceptable to overtrade, but like it worked to overtrade because you would take a loss and within 5 minutes you would find 5 other trades. And I'd get into all of them and 4 of them would be winners. And these days, like, I mean, how much have you dialed back your trading? And this is probably good for a lot of people to hear, right? Because I think it's probably one of the easiest things to do as a trader is to see a setup you like that looks good and take it. How much have you dialed back your trading? And 2, I'd love to hear how you stopped yourself from overtrading.
Well, I mean, I didn't really stop myself. The market just kind of eventually beat me down enough to where I had no other choice. But like I just got like a really bad impression in 2020 and 2021 that, you know, like this is always how the market's going to be, or even if it's like half this volatile or a quarter of this volatile, I'll find a way to make money. And so I got comfortable trading midday because you could scout midday all day long and do well. And so that was the first habit I had to break, was from 11 to 2, I try to just not even look at charts or, you know, especially not trade. And sometimes I do slip up, but I keep the losses small. But I think that's the biggest thing is if you're a long bias trader, you really need to find what works in the morning and then get out of there until the afternoon, because that's one of the first things we learn is that midday trading can be dangerous. So, you know, that's one thing you really have to focus on, is just that's where overtrading, majority of it will take place, is midday. So
have you ever considered going short, learning to short more in depth? Because I know you said, you know, you and I both are primarily long bias traders, but like, has there ever been a temptation to go short?
I'd say like 1 out of 20 trades is probably short, but I'm not so convicted on it that I'm willing to like open a Cobra account or something like that. So it has to be something easy to borrow on E-Trade, something overly obvious, preferably some big cap that's going parabolic into resistance or something like that. And it's always small size, but for the most part, shorts just don't make a ton of sense to me. So I see certain people on Twitter that I've been following for a while, and they're like 100% short biased and they completely crush it. And I want to reach out and ask them, you know, like, how do you get started here, and yada, yada. But I don't know. I've been sort of lazy about it, and I just don't really think that my brain is wired to look at charts from a short perspective. I've just always been more long biased.
No, 100%. Question, you know, we'll start wrapping this up here. You know, we're getting to that 45-minute mark. So a couple things I do want to ask, but one, if you had to do this all over again, right? I mean, you essentially took out the last 3 years. You're starting in this market after hearing how crazy, 2020 and 2021 was. We're talking about it all the time right now. How would you do it? How would you go about it? Like, what do you think, knowing what you know now, right? Again, assuming you have all this knowledge still, what would you do? How would you do it?
If I'm starting over in 2020?
No. Like I guess you're starting from scratch today, right? Like today is your first day trading, and you saw all this craziness. What would you, I guess, how would you do it? You know, would you still want to be over PDT in this market, right? Would you, I guess, essentially almost like just some, to newer traders right now who are just getting started that are hearing all this and we're talking about this market craziness, but they didn't really get to experience it. What do you think like the best steps to take are that you would do yourself if you were starting today? Because we did learn a lot of, unfortunately, good and bad lessons from a hot market. I mean, you were just talking about, you know, I for one thought the market was always going to be this volatile from now on, or that volatile, but it's not. And we've adapted and we've changed. Maybe some setups you would focus on. You know, would you be over PDT? What would you focus on? Maybe journaling, you know, things that worked, that have helped you get to where you are today, if that makes any sense.
So I think that you should always want to be over PDT, because when you're under PDT, you're forced to not overtrade. So, you can't learn to not overtrade because you're forced to not overtrade. But when you're above PDT, you actually have to develop that discipline to not overtrade. So, and when things do get hot, you obviously have the ability to trade in and out as much as you want. So I definitely think if you can get over PDT, do that, learn what it feels like, learn that you have to be disciplined, learn how to not overtrade even when you have the ability to, because that's how you're going to develop those good habits.
Can I interrupt you real quick? Right there,
Yeah.
I just want to add to that real quick too. So, that's a great point, and that's something that I think about a lot is, the PDT rule really sucks because it's going to force you to miss A+ plays if you're out of day trades. What I did when I was under PDT was I actually used a cash account, and you can look more into that. I'm not going to get too far into it, but if you don't have the ability to get over PDT, a cash account is going to teach you one cash management, but it's also going to allow you to freely trade. Smaller size, but the same concept if you can't get over it. Keep going. I just wanted to put that out there because I know there are going to be some people that are like, man, I really want to be over PDT, but I can't be.
Mm-hmm. Another option, if you don't want to do a cash account, this is a little bit off topic, but you can obviously open up multiple margin accounts under PDT. And then if you have parents that don't have a TD or E-Trade account yet, you can put one in their name, and you can get up to 9 or maybe even 12 day trades per week while being under PDT. Or you can do what you said with having the cash account, but then obviously you have to wait for the cash to settle and whatnot. Right. So there's ways around PDT, but as far as setups that work today, I don't know how much advice I have on that, because some of the trades I take with looking for intraday trend breaks and trying to find that tight risk reward at that breaking point from the stock finding support and then moving back up to retest. It sounds like a first green day, but sometimes it's not. Sometimes it's in the middle of a red day. A lot of that stuff can't really be taught. It can only be learned and discovered. So
screen time,
I would just say, get as much screen time as you possibly can. And no one has the right to complain about their trading until they put in a full year of screen time, showing up every single day, staring at the charts all day long. But I don't know how much advice I have right now as far as what setups to take. I just think that no matter what the market conditions are like, you should be here studying, learning, because then when this happens again in the future, you'll be able to recognize it more easily. But I think the name of the game right now is not necessarily scalp, but pay yourself, take small moves, look for 3 or 4 to 1 risk reward. You don't have to hit home runs, just stay alive and wait for something to prove itself. We haven't had any crazy day one runners in a couple of months. We might not have them ever again, but that's what we do. We show up and we wait for the markets to prove themselves, and then we size in where we see appropriate, and we just do our best. So right now, my best advice is just stay patient.
No, couldn't agree more with that. And hey guys, while we wrap this up here, if you have any questions for Jordan, drop it in the chat. So might get a couple questions for Jordan to answer if you have any. And when you're out there, be sure to hit the like button. But I want to really kind of restate or double down on what
reiterate.
You said. Reiterate. Thank you. One college dropout to another. At least one of us is good with words. No, it's patience is the name of the game. But I think a lot of people who are newer almost translate that to, well, I don't need to be in front of the screen today. Yeah, you do. Yeah, you do. And if you can't be there during the workday, if you work, and I know a lot of people do, that's what after hours are for. And I'm not saying go watch after hours moves. I'm saying go back and look through the charts. I mean, one of the best things I think you can do if you're trying to learn, right, is literally just, you said you put up your best and worst, you print out your best and worst trades and you hang them up. Start hanging up charts of things like, what are the common patterns? Separate the trades, break them down. Is this a breakout trade? Is this a bounce trade? Is this a multi-day breakout? Is this an all-time high breakout? Whatever it is, how are these similar patterns acting intraday? And that's what you're gonna start developing. Okay, you're gonna start seeing very similar repeated patterns, right? For example, I know intraday, right? One of mine, and I know Jordan, you too. We like to trade those intraday trend breaks. It's not that they don't break trend anymore. It's that these days the follow through to that trend break is a lot less existent than it used to be. And that's where you're going to see these cyclical changes, right? First screen days still happen, but like a Tilray, for example, right? You didn't really have the opportunity to get in right out of the gate. You swung it. And that was how that first screen day worked. They just change in terms of their effectiveness. So I think that's fantastic. Yeah, I don't know. Anything else you want to enter? Actually, I have a question. I'm going to start asking this to every guest I have on now because it's something. It's from one of my favorite podcasts, How I Built This with Guy Raz. Have you ever listened to that, Jordan? Nope. That's another good podcast. It's not like trading related. It's just business related. But one thing he always asks every guest at the end of the episode is how much of where you are today is based on skill and how much is based on luck. And think a little outside the box, like luck meaning, I know you knew Dom through school and that was a big part of how you got in here. But if you had to really break it down, how much of it is skill and how much of it is luck? It's a toughie, isn't it?
I mean, I could say as much as 99% was luck because if I didn't know Dom or have the ability to meet Jack, I highly doubt that I'd be here today because, like, I'm not going to say that they held my hand, but being able to have those real life examples of the process working and they're right in front of you in an office and they're letting you watch them for free, like something that certain people would pay thousands of dollars for, like that was an unbelievable edge. And I can't even describe how thankful I am for that because I mean, I don't want to say 99% luck because, after they proved to me that it can be done, I was the one that put in all the hours. I'm the one who hasn't taken a vacation in 2.5 years. And, I'm the one that applied what I learned from them and put it into new listed patterns, took the OTC principles, adapted them to listed patterns. Even before like someone like Dom kind of dived into listed, I was already kind of trying to apply those principles to listed stocks. And so, that's a really tough question because like I said, without them, I absolutely would not be here, but I've put in a lot of work. So
I know
let's say 60% luck, let's say 70% luck, 30% skill.
No, I think that, and that's just the thing is, I mean, anyone, right? The way I always see it is anyone who can be fortunate enough to get into this at all, there's a luck factor, right? Like whether you've saved money up or just there's the luck of just finding out that this is a thing, right? I mean, some people will never know. I'd argue probably more do now than before, but a lot of this stuff, if you're not, on Twitter, you're not watching these kinds of videos and whatnot, like you might never really know these stories happen. And so I guess there always is a luck factor, but I know because Jordan and I used to be trading accountability buddies. I mean, Jordan's put in the hours and he still does. So, with that being said, I'm not seeing any. I do see a couple like brokerage questions. Actually, I'm just going to answer that. It's up to you because someone's asking using like a 6-to-1 leverage offshore broker. You ought to be really careful. Be really careful with that. That's not nearly as regulated.
Trade.
Yeah,
that's trade.
Yeah, like get a very normal broker. Something. Again, just using 6-to-1 leverage. That is. But do what you want. It's completely your choice. But I don't mean to laugh at that. It's just like when I was first starting out trading, there's no way I could even fathom doing something like that. So I wouldn't recommend it to anyone. I would recommend starting small, learning the basics, developing good skills. You don't need leverage until you have a lot of money. So I personally have used my leverage once or twice in my whole career. I only use it when I go all in SPY. I'm kidding. I don't do that. No, I agree. I mean, just be careful, but leverage is very scary, especially when you're not in that disciplined state yet. You're going to have to learn discipline the hard way by taking big losses. And I would hate to take a big loss 6 times leveraged. Yeah. All right. Well, Jordan, unless you got anything else you want to add, I think this is a fantastic episode. I'm glad people get to know who you are. Cause again, you're one of my first trading friends, man. Like we put in some work together.
It was just crazy that I'm pretty sure the day I quit my job, May 15th, 2020, was the day you dropped out of college, May 15th, 2020.
It was, yeah. That was like my last day, and I didn't have it. Like, I don't think I was fully committed to it yet. But I just remember us taking like 1,000 shares of some like $2 stock at Lowe's, and just watching giant volume candles coming, carry it back up through VWAP, and I had no right to make $1,000 trade back then, but it would just happen like every other day. It was just pure insanity, and me and you would just be going nuts on Discord, just like absolutely nuts. It was a wild time, and honestly, without those times, I wouldn't be here either. We've come a really long way. But use this as an inspiration. Find a trading buddy, right? Like that's the one last thing I'll say is find someone to hold you accountable. It's great to hold yourself accountable, but having a friend that's in a similar spot trading as you do that has similar goals, it's going to keep you motivated. And guys, I mean, if you're watching this, maybe you're on Twitter, maybe you got an actual friend that's trading. Like or even if you're in a chat room, you have everyone there has the same goals, right? Everyone. Find someone and just become good friends with them. And I mean, I think Jordan and I have really, really helped each other. And I mean, I wouldn't be here without Jordan. Mm-hmm. I wouldn't.
That's completely mutual.
Much love, man. All right, well, we're going to end this up here. Jordan, thank you so much for coming on. This was seriously a great episode. Good to catch up. We haven't had a call in a month or so, especially about trading. So it was really seriously great having you on here, man. Thank you so much.
Thanks for having me, bro.
All right, everybody. Thank you again for watching. Thank you, Jordan, for joining. Guys, if you haven't hit the like button, drop it now. And